I'm Benjamin Ensor, Director of Research and Strategy at 11FS, and this is Fintech Insider News. This week, we're talking about N26 claims the regulator has cost it billions in valuation, Starling is banking on Engine for growth, and looking after chickens, here's what side hustles British children are taking on to plug their pocket money gap. We discuss all of these and much more on today's show, so don't go anywhere.
The time for community banks and credit unions to win is now. While the big players and exciting new challenges grab headlines, regional institutions are at the heart of the banking ecosystem, putting the service back into financial services. Serving their local communities, these organisations around the world have a unique advantage over their competitors. They have deep, established roots with their customers. They offer a local, personal service, and they're not tangled up in the legacy tech mess that the big banks are. To read, watch, and listen to what else we've got to say about them and how they can win, visit 11fs.com/communitybanks. That's 11fs.com/communitybanks.
Hello and welcome to episode 862 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS, and I'm joined this week on Fintech Insider News by three guests here to help me break down the biggest stories from the past week in fintech and financial services. So firstly, I'm delighted to be joined by my co-host for today, Kate Moody, Strategy Director at 11FS. It's been a while since we were on a podcast together. What have you been up to or working on recently?
I've just been avoiding you. I've been working on a really exciting project with a large bank in the UK to kind of help them really rethink how they approach kind of customer propositions more broadly and really kind of take a sort of customer-led approach to building new things. So yeah, it's been really exciting. But yeah, coming out of a customer nerdathon phase and back into the world of podcasts. So yeah, glad to be here.
I love it when people actually try to be customer-led as opposed to just saying, oh, yeah, we're customer-centric and not meaning it. Anyhow, so we would also like to welcome to the show for their Fintech Insider debut, Chris Michael, co-founder and co-CEO of Ozone API. Welcome to the show, Chris. We'll be covering some exciting news from you and your team later, but could you tell us a little bit about you and a little bit about Ozone API, please?
Sure. Well, yes. So I'm originally not from a financial service background, more from a tech background. One of the things I spent most of my career doing was working in ad tech, marketing tech as originally a founder and then CTO of a digital agency. So I spent a lot of my career working with data and helping brands across all different sectors in all different markets to leverage data to provide better digital experiences for their customers. And I fell out of love a little bit with agency life. I wanted to do something else back in 2014. I spent a year in UK government running one of their big digital transformation programs in the Ministry of Justice, and really got into using APIs to build great digital experiences on top of legacy systems, which is kind of one of the key points about open banking and open finance. But I was then approached to help set up an internal digital practice within a large consumer packaged goods company, which I did for a few years and was really enjoying that. But I was approached then in 2016, the back end of 2016, by the Competition and Markets Authority to help set up this thing called open banking in the UK. And it really appealed to me because it was a kind of nationwide and actually has now become a global paradigm, if you like. So I joined Open Banking Limited, the open banking implementation entity, at the end of 2016. And my role there was to lead the development of the UK open banking standard and the technology that underpinned that. And that's where I met my co-founders, Freddie Gaiara, who's our CTO, and Hugh, who's the co-CEO alongside myself. And we were busy getting open banking up and running in the UK, and we saw how all of the banks were struggling. And struggling to implement these standards that we were developing. And so that was really why we formed Ozone API at the back end of 2017 as a platform to help banks implement open banking and open finance. And we started out really doing this as a side project, and I'll tell you a little bit more later on about actually what my inspiration was initially behind this, because it's very relevant to today's announcement. But we our core business now is we provide an open banking, open finance overlay software as a service typically model that sits on top of banks' core systems and exposes APIs to the markets that are aligned to regulations and standards all over the world. And I think I would say this, I'm slightly biased, I think we're market leaders in this space because we support standards all over the world. Wherever there's an emerging regime or regulation around open banking and open finance, we like to be first there in the market, providing infrastructure and services to help banks comply with the regulations, but also to help banks go one step above that and use their open API channel as a new competitive commercial channel for their customers. And the other thing that we do is we work very closely with regulators around the world, helping define standards and frameworks for open banking and open finance.
Fantastic. Well, welcome to the show. And finally, we have a welcome return for Doug Mackenzie, Head of Content and Programming at Fintech Fringe. It's great to have you back on the show, Doug. And you've got a new role. Would you tell our listeners a little bit about Fintech Fringe and what you've been up to?
Yeah, gladly. I mean, how do you follow an intro like that, Chris? I mean, that is so impressive, but I'll tell you how I can try. And that is, I've been leading the content and programming over at the Fintech Fringe Festival as part of London Tech Week. And that's running from June 10th to June 13th. And it's a festival with some really incredible speakers. We've got Nick Druitt from Engine by Starling, Jordan Sinclair, the president of Robinhood UK. And I think from a content perspective, what really sets us apart is we've segmented the days along each topic vector. So you know that if you're taking time out, you're going to be catching up on emails. You want to know whatever you come to see is going to be speaking to you and your specialization. And I think from that, I'm just really excited to show it off and hope some of your viewers can and listeners can come along and enjoy the festival. But yeah, that's what I've been up to over the last couple of months.
Fantastic. That sounds like an invitation to all of us. All right, well, let's jump into the news. So our first story this week comes from Germany. We picked up, this was reported in the Financial Times, which is that German digital bank N26 says that regulatory action cost it billions in lost growth. So the German digital bank N26's founder, Valentin Starf, has told the FT that the financial regulator BaFin may have cost the bank billions in valuation. The past few years has seen N26 face a series of regulatory actions for poor anti-money laundering controls. It was fined €9.2 million in 2022 and €4.25 million in 2021 for the systematic late delivery of money laundering reports. In 2021, BaFin capped N26's new client sign-ups to 50,000 per month. This was compared with around 170,000 the bank was getting at the time. This cap was raised to 60,000 last year, and it will now be lifted this June 2024. The fintech has said that the direct cost of this adds up to about €100 million. Starf has also said that the fintech has now shifted its focus away from growth and towards profitability with the aim of being profitable by the second half of this year. Kate, why don't I come to you first? The punishment might seem pretty severe to Valentin and Starf and other people at N26, but what do you think? Do you think that was a harsh punishment or not?
I mean, I can imagine, they definitely weren't pleased when they first found out. Obviously, we know that money laundering as an issue is a huge problem. It has rippling impact across society. It supports crime, violence, terrorism, human trafficking. So, the fact that BaFin have taken steps to try and address what they are obviously seeing as behaviour or onboarding practices which are not tackling money laundering in the way that it should. You can't blame them for that. I think we sort of sometimes hear this quite a lot when we speak to incumbent banks. Obviously, a lot of our work means that we're chatting to people in big established, big financial organizations around the world. And they often sort of say, oh, these fintechs, they don't have to handle as much from regulators as we do. They don't get the same scrutiny. And I think instances like this show that, particularly in this example, in this market, that's not true. They've paid a huge price for whatever shortcomings BaFin found. But also, you could see the positive to it. They've had to invest substantial amounts of money in fixing this and putting the technology in place to help them to scale in a safer and more secure way. But we're also seeing those kinds of costs being incurred by financial services organisations around the world. Everyone is having to try and tackle this problem and having to spend money on it. So, maybe as they move into this next phase of development, it will actually put them in a better place to articulate to investors why they are better placed than maybe some of the other organisations that haven't faced punishments at this level.
Chris, I'd love to bring you in on this. I mean, the regulations in banking exist for a reason, right? I'm sure it's a big adjustment coming in from marketing, where there are fewer regulations. Obviously, there are some, but surely this is just one of the fundamentals of operating in banking. Is you just have to know what the regulations are and you have to comply with them. It's not really a choice.
Well, I actually think this isn't just a banking or financial service problem or issue, and I think it's a good thing that regulators are putting in stricter requirements and enforcing them for financial service organizations. I mean, sometimes I wonder why this isn't the case for social media platforms as well. Fundamentally, it's down to there's a big problem, which is a lack of, in the onboarding KYC process. There's a lack of diligence quite often about really understanding who your customers and users are. And if you run any platform, whether it's a bank or another financial service company or a social media platform, if you run that and you don't know who your customers are, all sorts of bad things can happen. And what we're seeing playing out with like push payment fraud in multiple markets around the world, what we're seeing, with some of the very negative stuff that's going on in social media and has been for a while, it's all down to a lack of, KYC, a lack of digital identity, which is strongly assured. And I think there's all sorts of problems there. So I think it's a good thing that regulators are stepping up. And, to use the analogy again, I think it's good that, financial service companies should be focused not just on growth, but should be focused on profitability. And I would say the same thing about social media as well. Social media companies should be focused on profitability and not just growth. And I think the two things are very linked.
Doug, what did you think? I mean, is this just a fintech or a digital bank just being a bit slow to sort of grow up and really focus on what it needs to get done? Is this cutting corners? Were they just unlucky? Was it a technical problem? I mean, what did you think of this story?
I couldn't help but think, was BaFin quite strict because of the Wirecard scandal a couple of years before? To be slightly unfair to them, but it does put it in a paradigm where suddenly, if you're called out as a regulator, and you do then have to kind of show due diligence, but then at the same time, N26 had been apparently laggard with reporting their issues for a number of times, which to Chris's point, we all need, every industry needs to be better at, and especially finance, and especially social media. These are people's lives at stake here, and it is, the severity matches that. But it's interesting to see that a couple of years later that has been lifted. So I think probably they would have felt hard done by, but the fintech industry has to match where the traditional institutions have always been playing in for hundreds of years.
I was surprised by this because I've spoken to many digital banks in Europe, and they take KYC and AML so seriously precisely because they know that regulators like BaFin can quite rightly come in and clamp down if there are any gaps in their processes.
Yeah, I thought it was super interesting when I was looking back to the original sort of press releases that N26 put out to their customers when they first introduced these curbs in terms of numbers of customers they could onboard, but didn't even mention the fact that it was prompted by the regulator. They just sort of implied that it was a strategic decision that they were making so that they could onboard customers with a better experience. And I'm probably not doing justice to the wording, but it was obviously a very heavily PR'd statement. So whilst you have sympathy with them on some fronts, And obviously, we do want to see competition in these markets. We want to see customers having choice, having the opportunity to use services which are better aligned to how they want to manage and spend their money. And N26 has some really great functionality, some really, really nice, well-designed journeys, are launching, a suite of really interesting products across investments and crypto. So yeah, you kind of want them to have learnt from this and to be now in a better position to kind of move on from it and continue to challenge in the markets, the many markets where they've launched to date, because all of those customers will benefit from them being a stronger, more sustainable bank going forwards.
Chris, what did you think about this point that Valentin Stahl, that the CEO, was saying how we're now needing to shift from growth towards profitability? It feels to me like a lot of fintechs made that shift 2, 3, 4 years ago. Is he being a bit late in shifting his focus? I mean, what do you think as a CEO?
Yeah, I think there's always a balance. You need to be realistic about when you're going to get into a profit situation. I think if you focus on profitability too early in a business, then you can damage growth and damage evaluation, and you may never achieve your objectives as a fintech or any startup. So I think it's always about a balance and timing issue, but certainly continued focus on growth at the expense of profitability, and particularly where you're maybe taking risks or not doing things properly with, for example, KYC. I think that's a bad thing. I think we've seen a lot of fintechs who have really struggled and still struggling to get near profit. But we've seen other fintechs who are getting to profit within a reasonable time frame, and then that profit is, I think, to use the phrase you used earlier, is sustainable. Because you've got enough momentum, enough growth, and as soon as the profit starts to come there, it's not a one-off profit; it's a sustainable, ongoing profit. So,
Doug, how much opportunity do you think this has cost N26? Because in the period when BaFin was controlling N26's growth, companies like Bunk, like Revolut, and other digital banks across Europe have been, growing like gangbusters. Is Valentin right that he's lost billions in valuation?
I mean, it came at a hard time. If you think, back when those low interest rates were about, it meant that these organizations could scale unprecedentedly. And now we're in a very different situation. I imagine that must be the kind of burn that they're feeling. But I guess it's ultimately put them in a better position in the fact that now they're focused on their core markets, their core offering, rescuing Germany from cash, and really kind of opening up the rest of Central Europe, because we saw with some of the other digital banks where we talk about how successful they've been with their growth, but we've got to remember some of not failures, but maybe stutters to launch, for instance, in the States. Whereas this has kind of enabled N26 to really corner that home market. And it kind of speaks to what the other fintech banks have been doing that have become successful. And that's really going after their particular core of customer. You look at all the SME lenders, the Oaknorths, the Alecas, Tide. They've really kind of focused on what they do well. And as a result, they've seen incredible profitability in a very short period of time. And then you go across the pond down to Brazil, and you look at Nubank becoming profitable just in its core market because it's looking after an underbanked or non-banked group of peoples. And as a result, they don't need to scale in ridiculous proportions because they just know what they're doing is right.
It certainly sounds as though it's a pretty costly mistake by N26, and I bet they're ruining not having managed to get their AML sorted. Okay, let's move on from a German digital bank to a British digital bank. So our next story is that Engine by Starling has integrated Ozone API into its software as a service solution. So Ozone API, which is a global leader in open banking, has partnered with Engine by Starling, which is Starling Bank's software as a service native banking platform. The integration of Ozone API into Engine's core banking platform will help clients comply with open banking regulations worldwide. The news coincided with Chrysalis, which is Starling Bank's second biggest investor, claiming that Starling could be worth £10 billion within a few years, fueled by the growth of Engine. Engine currently has two clients, Romania's Salt Bank and Australia's AMP Bank. Chrysalis expects this number to grow to 40 or 50 over the next few years, with annual Engine revenues reaching the hundreds of millions. So, Chris, it obviously makes sense to come to you first on this one because of Ozone API's big role in this. So, firstly, congratulations to you and your team on the partnerships. Can you tell us a little bit more about sort of what this means for Engine by Starling customers, and what is it that Ozone API is sort of providing in the tech stack? So, for sort of the non-technical listeners, can you just help people understand what is it that Ozone API is doing? And how does that fit in with Starling's capabilities?
First of all, I mean, this is really exciting news for us because Starling Bank has always been an inspiration to myself and to many of us at Ozone. In fact, Starling and Sam Everington in particular were actually the original inspiration for Ozone. So not many people know this, but the very first thing that we did is, I think I've known Sam now for about 8 years, and we were at an event that Starling were hosting. And we had a good conversation with Sam about the technology stack, how they built up the technology behind Starling Bank. And that inspired us we looked around at other challenger banks and we thought, there aren't many of them in the UK. There was Starling, Revolut, Monzo at the time. And our original thought was, why don't we launch our own digital bank? And so Freddie and myself, we built a basic sort of core banking platform, but it didn't have a UI, it just had an API. And our thought was we would go and build the UI on it, we would go and apply for a banking license and become a bank ourselves. And someone very wise said to us, don't do that. The world's got enough. There are enough companies in the world with a banking license. You don't need more banks. What you need is banks need better technology. You know, we kind of very quickly pivoted and thought, let's try and provide technology for banks, but rather than try and become a bank. And we focused on the bit that we knew well, which was the open banking piece. So we pivoted our product from a core banking platform into an API layer that enabled banks around the world to comply with open banking regulations and standards. And Starling were not a customer. They had built their own API layer, and our first actual customer was Tide Bank, which Doug, you mentioned earlier. So we've always focused, or initially we focused on customers and partners who were really digital leaders, and we want to align ourselves with companies in this space who are digital leaders. So what we provide for Starling, or for Engine rather, is this open finance, open banking API layer that will enable Engine, wherever they operate, you know, whichever banks end up using their platform, it'll enable those customers to very quickly, in fact, almost instantly, be compliant with whatever local standards and regulations exist around the world. And because open banking and open finance is becoming much more important to every regulator and every market around the world, this will be a key enabler to help Starling on their kind of path from 2 customers to 50 customers. It'll be a key enabler for Starling to help them instantly offer those customers around the world the instant compliance, but also more than that, it's it's an API channel that their customers can commercialize as well. So yeah, it's a there's a lot of synergy between Starling and ourselves in terms of our mindset and how we think. Starling have, I wouldn't say pivoted, but they're what's going to drive their growth is more the technology that they offer to other banks rather than their kind of core banking service in the UK. And for us, what will drive our valuation is being able to offer this technology out of the box to banks around the world.
It's a really interesting point about the pivot. I want to come back to that in a minute. But just one other quick question just on your partnership with Starling. You mentioned sort of API standards earlier. So, I mean, presumably a part of what you're doing here is making sure that not only that Engine by Starling customers can implement the APIs that enable them to share customer data and so on, but that those APIs are compliant with all the relevant standards and easy for other partners in the ecosystem. Is that hard, or is it actually quite easy to set up the APIs to comply with the standards? Because there's a lot of standards, right?
Yeah, it's hard to comply with one standard, and I think one of the things that we saw first in the UK was how hard the big banks found it. They spent many years getting it right. The large banks in the UK, they invested millions, if not tens or sometimes hundreds of millions of pounds a year in building and trying to comply with these standards. And it's particularly hard for banks who have to do this in multiple markets, or for other core banking providers who want to offer that services to banks in other markets. It is very hard. We've found a way of doing it that seems to work. It's our specialism. We really pride ourselves on doing this really well, and we are very focused on what is actually quite a thin layer, but there's a lot of complexity there. The complexity is how do you secure these open APIs? How do you make sure that it's only authorized or regulated actors who can access these APIs? How do you make sure that the APIs work in alignment with the consent that's given by the customer, whether that consent is to access data or whether that consent is to initiate a payment or some other service? So that the model is basically the same all over the world, pretty much. I mean, a lot of it is based on the UK standards that myself and my colleagues at Ozone, we were instrumental in developing. But what we're seeing now all around the world is these standards are evolving. They're continually evolving and changing. So even in one market, we're already on the 4th major version of the API standards in the UK. In fact, there have been about 13 or 15, I think, minor versions over the last few years of the standard. So the UK standard has evolved significantly. In every other market, these standards are iterating. They're not just copying what was in a previous market. They're iterating. There's a localization. There's different approaches to how the standards are developed. There's more and more functionality that's being unlocked in different markets and with different regulators around the world. So it's complex. It's changing all the time. Part of the way that we deal with that complexity is we work with quite a few regulators to help develop the standards as well. So we like to be right at the forefront of innovation in this space to help these standards become more and more useful to fintechs and to end customers.
Doug and Kate, I'd love to bring you in on this point that Chris raised earlier about the sort of pivot of Starling Bank, because there's times Starling Bank almost is better known in fintech circles for its really interesting strategies than its fantastic customer propositions. Not quite sure which one to do. Doug, let's go to you first. I mean, is Starling interesting for the pivot? Is it strategy? What do you think?
Yeah, I mean, the fact that out of the kind of the British fintech banks, the first to kind of achieve that sustainable level of profitability, isn't that just incredible? And to do that kind of without bells and whistles, just getting on with it and achieving that profitability is a marked change into the kind of rock and roll of maybe some of the other two, but that in itself is amazing. And we're seeing that ability to pivot and become something different, but also known at the same time for what they used to do is important. I mean, you look at Amazon, famously not actually profitable, for its kind of shopping element, but hugely profitable through every other element, and as a result, they are now. We don't need to say, but it's that kind of level of detail of changing with the times and offering up a product that actually at enterprise level can be scaled and be so critical to so many institutions, both large and small, across the world, as already demonstrated within those two banks, is a great sign. It is amazing to see maybe the 40 that has been touted, but time will tell. How exciting.
Yeah, that's what I'm really interested to see play out over the next, I don't know what time frame is realistic. I talked about a year or a couple of years to get to that 40, 50 number. So, I mean, Chris, I'd love to get perspective in a minute, but when I was reading about their work with SaltBank in Romania, some hugely impressive stats in terms of, getting to market in 12 months, onboarding 100,000 customers in 2 weeks, becoming the most downloaded financial app in Romania, apparently. So, but when you look at sort of Sam's interviews about the process that it took to get to that, he talks about 5 to 10 engine staffers working on site in Bucharest, hand in hand with the team. And obviously that makes a ton of sense when you're working with 1 or 2 clients at a time. But I'm really interested to know, is that just a symptom of you having that first client relationship, doing that kind of product market fit with that first customer in a really sort of in-depth, hands-on way? or is that kind of the model that they'll need to scale times 40, times 50, which is really interesting just from a sort of personnel growth, skills growth perspective. So I don't know, Chris, if you've got any sort of like behind the scenes insights into like how these partnerships actually technically get off the ground from a staffing perspective.
Yeah, I mean, I think, well, the starting point is actually if the reason I think that this kind of target of 40 to 50 customers over the next couple of years, the reason I think that's more than achievable is because I am very fortunate to travel around the world a lot, and one of the things I do, which is very geeky, is I always look at talk to people about what banking products they use, both personal and business banking products. And I think we've been very fortunate in the UK to have some great digital banks emerging over the last few years. And there are a few. You mentioned Nubank in Brazil. There are a few in all parts of the world, but I would still say the vast majority of banking products so not the product themselves, but the UI, the mobile app, or increasingly it's mostly mobile that you see now that people interact with. The vast majority of those are not great, right? The customer experience isn't great. And the reason the customer experience isn't great, a lot of the time, it's not just the UI, it's the underlying technology. It's the stuff in the core that enables that. And the way that Starling Engine have built their kind of core product enables their customers to create really compelling digital experiences that just work. The underlying plumbing is really sound, really solid, and it can scale really, really quickly and really well. And that's something that's, I think, in huge demand. There are, I think, something like 30 or 40,000 banks around the world, and the vast majority of them don't have great technology, and they really struggle with, and particularly when it comes to the requirements of open banking, they really struggle with things like being able to have a real-time ledger. They struggle with integrating into real-time payment systems. They struggle with just basic customer experience around payments initiation, around certainly they're struggling when it comes to implementing open banking and open finance. And I think that's something that Starling and the kind of Engine product can really do. So I think this target of 40 to 50 is more than achievable, and I think there's huge demand for this. I think they might actually struggle to meet the demand that they get when they move into some of these markets that are underserved when it comes to this sort of technology.
Doug, last quick question to you. So obviously Chrysalis is a little bit self-serving and saying, hey, this investment we've got is going to be worth millions or billions. But to your point about Amazon, where Amazon Web Services is arguably worth a lot more than the Amazon's sort of the core retail business, do you think we could see Starling evolving in the same kind of way, where, to Chris's point, the tech that Starling is providing out to other players could actually end up being more valuable than the retail and business banking businesses that Starling was sort of originally set up to offer?
Yeah, I can totally imagine that. To Chris's point, the fact that we're still seeing at this point that many traditional institutions really struggle to grapple with these tasks that Starling does pretty much as soon as you open the app. I think there's a huge demand for it. Whether or not and its interplay with maybe other core banking providers, that will remain to be seen as the kind of the differentiator there, and I'm not too sure, clued up on the differentiators there, but it does seem very exciting to think that they have that kind of proof of purchase. I want to say almost that kind of that branding, the fact that they've already gone and created it from the ground up, and if you want to be like us, why fight us? Why go elsewhere? Join us. So I think there's definitely that element, and to your point, it's a slightly self-serving kind of estimation, but I imagine it's probably being grounded in something they're quite excited about.
Fantastic, thank you. Okay, well, on that note, we will just take a very quick pause here, and we will be back very shortly.
We are super excited to announce that 11FS will be at next month's Money 2020 Europe event over in Amsterdam. We have loads of cool things lined up, including a couple of podcasts and even a run club for those who really want to burn off all of those stroopwafels. You could also swing by Stand K08, where our 11FS Pulse team will be showing everyone what best-in-class UX looks like, with our industry-leading product catalogue from every corner of financial services. They'll be hosting live demos throughout the event, so be sure to swing by and say hey. See you in Amsterdam.
Welcome back. Before we get into the second half of the news, here's a quick note to check out our most recent Fintech Insider Insights show. David M. Breer, Chief Executive of 11FS, is joined for a special one-on-one interview by Nomi Health co-founder Bo Hartman. Nomi Health is on a mission to fix the US healthcare system and make it accessible to millions of Americans who feel unable to get the help they need. It's a really great and sometimes harrowing discussion, and we're sure you'll learn a lot about how tech can help to rebuild the healthcare industry. So do look out for that in our podcast feed. It's the one just below this one. Okay, let's move on to our next story, which is another story from Germany. ABN Amro has acquired Germany's Hauck Aufhäuser Lampe in a 672 million euro deal. So the Dutch bank ABN Amro wants to acquire the German private bank Hauck Aufhäuser Lampe for 672 million euros. The acquisition aims to strengthen ABN AMRO's presence in the German wealth management sector, combining Hauck Aufhäuser with its existing Bethmann bank. The merged entity will manage around 70 billion euros in assets. The deal is expected to finalise in the first quarter of 2025, pending regulatory approval. And my apologies to all of our German listeners for my appalling pronunciation. Kate, this isn't a huge deal compared with a few of the really big deals we've seen, but it's still quite interesting, right?
Yeah, absolutely. I think we've talked a fair few times on the show about how the sort of wealth management private banking space really does feel, from everything we hear around the world, all different markets, to be a real focus point for sort of the next wave of financial services digital evolution. So it'll be really interesting to see how this plays out. Germany, I think, is the largest private banking market in Europe. And so, it makes kind of sense to kind of really try and benefit from that and to really double down on that. Obviously, it kind of brings in a customer book, but it also brings in, I think, 2 billion euros in loans. So I guess to our chat earlier about the importance of moving towards profitability, I guess if they can manage that loan book efficiently, then again, hopefully that will help them to diversify their income streams. And we've seen kind of shares in ABN AMRO jump up a little bit, I think 0.6% higher in early trades on Tuesday. So it seems like initially the market at least is warm about this deal. Obviously, we know from, again, all the conversations we had, we've recorded a couple of insight shows in it recently, how difficult it is to make these mergers a success. There are so many considerations, both from a sort of organizational perspective, from a technological perspective, from a regulatory perspective. So it will be really interesting to see how long it takes, if it gets approval, how long it takes for this to actually drop into place and for them to be in a position to actually take advantage of this combined customer base. And actually, if they spend 2-3 years stuck in merger mode and the rest of the market spends that time developing interesting new digital journeys that help affluent individuals to manage their money in better, more interesting ways, and it could turn out to be quite a big risk. But definitely interesting from my perspective.
That's an interesting and controversial opinion, that because I think the conventional wisdom in the industry is, you just merge and you buy assets and you hoover up assets and you cut out costs. And you're saying, actually, well, no, because that could really hold you up.
I think, but what we've seen from, some of the organizations that we've seen go through some of these big mergers, we know people in these organizations, we speak to them, you hear that the innovation agenda just gets put on pause. The organization is understandably consumed by these huge transformational processes to bring organizations together, to bring teams together, to create a sort of synthesized customer experience. So there just isn't in many organizations the capacity alongside that to also be thinking about brand new services and brand new journeys. And maybe if this had happened 2 to 3 years ago, I wouldn't have been so concerned. But just because of all of the noise we're hearing about the private banking sector, about wealth management, I think this is a time when many of their competitors will really be thinking what those new journeys should look like. And so I do think it is a risk.
Doug, what did you make of this story?
Yeah, I'd be interested to know if the fact that ABN AMRO is obviously owned by the Dutch government has any implications with BaFin or anything like that. But I mean, especially considering we've just talked about BaFin being quite strict over the last couple of years. But I mean, when you look at the wealth management sector, and I guess it's going through a wealth of changes itself, but it is a key area of growth. So I guess that's why ABN AMRO are really looking forward to kind of advancing in this area. And to Kate's point, the fact that the Germans obviously do it very well shows that they obviously had their target in mind, and it sounds like sound strategy from that perspective.
I noticed that the company that previously owned it, so the seller of the German private bank, which I'm not going to pronounce again, was a Chinese company called Fosun International, which also owns Club Med, which for listeners outside Europe is a series of holiday resorts for people who are sort of aged 18 to 30, and Wolverhampton Wanderers Football Club. So I guess there's a bit more of a strategic logic, Chris, to selling this to ABN AMRO than keeping it in a portfolio with Wolverhampton Wanderers and Club Med?
I think it's very, very interesting. But I think that with any merger, I think the two things that are most important are strategic alignment and cultural alignment. If you have those two things, then I think you can get round technology issues, regulatory issues. Those are all secondary, albeit important considerations. But if you have the senior management in the two organisations that are merging that aren't strategically aligned, and that happens an awful lot. I've been involved in sort of M&A before, not in financial services, but in other industries where there wasn't strategic alignment. There was just a sort of an idea to throw two companies together, and you looked at it purely financially, the assets of these two companies or the services of these two companies, you throw them together and you have this sort of woolly idea that you add 2 and 2 and get 5, but it doesn't work like that unless there's clear strategic alignment. And if there's not a cultural alignment, then also, you get all sorts of problems as well.
It's sort of tempting to imagine that two old established German private banks are going to have a similar culture, but you're right, Chris. I mean, just because they're in the same industry and they're both old, they don't necessarily have the same culture. And of course, to your point, the executives within them may have very, very different ideas. Okay, well, shall we move on to our next story, which is another digital bank story. It's been a busy week for digital banks, and this one comes from the UK. Well, and beyond, which is that Revolut is enhancing its new international wallet transfers with new mobile wallet partnerships in Africa. So Revolut has partnered with Airtel, Orange Money, and MTN to enhance its mobile wallets feature, enabling faster transfers from Europe to Africa. This expansion includes 14 new payment corridors covering 9 African countries and 3 digital wallets. Orange Money supports transfers to Botswana, Guinea-Bissau, Côte d'Ivoire, Madagascar, and Sierra Leone. Airtel Money enables transfers to Congo, Gabon, Madagascar, Malawi, and Zambia. And MTN allows transfers to Guinea-Bissau, Côte d'Ivoire, Congo, and Zambia. The feature allows quick and secure money transfers using recipient IDs like names, phone numbers, or email addresses. Revolut first launched its mobile wallets feature earlier this year, with users able to transfer money easily to Kenya and Bangladesh. So we've covered mobile money a few times on the podcast before. It's obviously huge. Kate, how big a deal is this?
I mean, I think it's a really impressive partnership announcement from Revolut. I mean, that's a really interesting mix of countries. Like my geography GCSE was a very long time ago now, but obviously a real mix of countries in terms of sort of population size, and I imagine probably they're slightly more interested in the Congo with 100 million people versus Botswana with just over 2 million people. But yeah, really interesting to have kind of that range of partnerships. And I suppose the thing that I'm really interested in the sort of international money movement space is I think we're seeing this progressive evolution of what these propositions are trying to help customers achieve. I think in the earliest moments of innovation, it was really just about trying to bring that cost down, because it was so extortionate to move money for these distributed populations. To send money across borders was, and in many cases still remains, just ludicrously expensive. So it felt like that kind of first real pain point was around just reducing the cost. I think the second feels like it's around reducing the time. And again, I think this is probably where Revolut is apparently going to really kind of focus on trying to kind of balance those two things, both like cost and time and ease of access. But I think the really interesting sort of next phase of money movement will be about thinking about how do customers actually use that money when they receive it. And I've seen from some of the work that I've done on sort of the west coast of Africa and other places that actually there are some really interesting propositions starting to emerge about, what is the currency that these customers take the money out in? And obviously the thing that we don't necessarily appreciate in markets like the UK that have had very, very stable currency valuations is, of course, you would just want your money to arrive and be in UK sterling. But actually for these customers, there are choices that they want to make about, do they want to receive the money in their local currency? Do they want to receive it in, for example, a stable coin? Do they want to receive it in US dollars? Is that allowed in the markets where they are? Because many of these markets have currency controls. So I'm really interested to see, I suppose, how this Revolut experience rolls out. But then I'm also interested to see, once they have it in place, given Revolut's history of building interesting, impressive digital journeys, if they start to tackle some of these wider problems in the international money management space.
Doug, we're seeing Revolut sort of bring out innovations sort of so quickly, we're almost starting to take it for granted that, Revolut's, done a new thing. I mean, Revolut doing a new thing is no longer news, but in a sense, this is sort of going back to Revolut's roots of that's what Revolut started as, is sort of cross-border money, right? What did you think?
Yeah, it's definitely a hark back to their old days, but it's also, to your point of the product suite that is offered and just how quickly it updates is at Revolut is really their beacon, and it's so impressive. It continues that theme as well, going back to if we look at what fintech is all about and what Revolut was created, is helping financial inclusion. Obviously, particularly for a younger generation that are more comfortable with mobile wallets than maybe traditional remittances and sending money cross-border as well in that regard. I think it's absolutely amazing to see that they've continued this multi-currency kind of element and to start it in countries that probably have quite a huge amount of competition. I think. From our notes, one of the first places they started was in Bangladesh. Tackling a huge population and deploying into that market is just absolutely impressive. And I just love any instance where fintech is opening up, financial products to people that have previously not had them. So I think this is brilliant, and I love the fact that you brought up that it's a kind of throwback to the roots.
Chris, is this all about thoughtful selection of partnerships? I mean, is it really the partners, Airtel, MTN, Orange Money, that are actually making this possible? And I mean, is that the kind of sort of clever, not trick here, but the key to this?
I think that's definitely a key to a key part of it. Revolut have got, as Doug mentioned, they've probably got better credentials than anyone else to do this, and I think they're smart enough to recognize that they can't just go into the market and a number of markets and do this without partnerships. So I think it's a very smart move. I don't know enough about the partnerships in question to know whether they are the right partners, but I assume Revolut know what they're doing there. I also wonder if timing is a good timing now as well, because one of the challenges in developing markets has been that the lack of smartphone penetration and smartphones that are capable enough to run very sophisticated applications like Revolut's digital wallet application. So if timing is right now and there is better smartphone penetration and that's only going in one direction, then it could be a very smart move, and I suspect it's a very smart move for Revolut.
Yeah, I can't help thinking there's probably a few people at Wise and some of the other sort of consumer cross-border payment fintechs are looking at this saying,
Yeah, I mean, we're obviously seeing some really great fintechs coming out from the African continent as well. So I'm a big, massive fan of Nala Money, some of the things. And obviously you want all fintechs to be successful. But I suppose there's also a part of me that thinks, these are problems which are grounded in the needs of the people of the African continent. And I would love for them to be solved by businesses that are amongst those communities and are better positioned, I would assume, to really kind of build these broader journeys that really help not just to move money, but then to use that money in ways that will be beneficial to their customers. So, yeah, and obviously really just want any success which helps kind of rebalance the huge inequalities we see in sort of wealth distribution globally, but also really just want to champion some of these kind of more local native businesses as well.
I wonder whether, to Chris's point, the what's happening here is the Revolut customers are going to be people in Europe with links to Africa using, to your point, the smartphone apps, but then sending money back to people who may have smartphones or may have feature phones that are running on Airtel or Orange Money or MTN. And then to your point, Kate, the really interesting point is, okay, how do they then get the money out?
Yeah, and then I think the other emerging trend in this space is, again, understandably, a lot of the focus today has been about the Europe or US to Africa corridors, but increasingly as we see just the development of these economies, corridors within Africa itself will start to become more interesting. So actually, if you're really thinking ahead, you're also starting to think about not just how do I move money from the UK to the Congo, but how do I move money when it gets to the Congo, from the Congo to the Zambia, for example. So yeah, I think it's just a super, super interesting space. Sorry, I should probably stop.
But I think that's a really, really important point, actually. That intra-African trade is actually increasingly important, and the future of the continent depends on lowering trade barriers within Africa and making it easier for people in different countries in Africa to move money around. There was a very interesting article the other day about one of the sort of biggest donors to African economies, one of the most sort of generous African philanthropist, talking about how many different visas he needed to get just to move around Africa, and then he needed far more visas to move around Africa than he on an African passport than he would on an American or a European passport. Okay, let's have a quick look at a couple of shorter stories this week that we don't have time to cover in full. Kate, what have you got for us?
Yeah, so our first one in this section comes from Fintech Global, and that is Synapse, backed by A16Z, has collapsed and 10 million customers could be hurt. The sorry saga of Synapse continues to rumble on. A deal to save the beleaguered banking-as-a-service company has fallen through, and the company has now been told to close and liquidate under Chapter 4. It's thought as many as 100 fintechs and 10 million end customers will be impacted by the collapse, with the true damage done and being felt for years to come. We did cover this story quite extensively in episode 857, so we'd recommend skipping back through your feed if you want to learn a bit more about how we got to this point. But Benjamin, obviously, sad news. Anything else you kind of wanted to add to this one?
Yeah, I think it's just a really interesting example of a sort of regulatory gap, because while the underlying banks like Evolve Bank and Trust are regulated by the Federal Reserve, the fintech, and so in this case Synapse, which was a banking as a service provider, is not regulated. And so the problem is that Synapse's ledger wasn't up to date, and Synapse cut Evolve Bank's access off to the ledger off. And so the problem is you've got 10 million customers or so who've lost access to their money because Synapse has lost track of it, and there's a dispute about where the money is sitting. So the money's not necessarily lost, but you've got millions of people who've lost access to it. And the trouble is it's got caught up in court cases, and none of the American regulators are saying that they've got jurisdiction to come in and fix the problem. I think this is huge, actually, because I think this in America, we've had this model of the banking as a service provider sitting between the consumer brand and the underlying bank. And this saga is really calling into question that business model, because I think a lot of brands that are thinking of offering financial products, or some that are already doing so, are now going to think very, very carefully about, do we want a relationship with anyone other than the underlying bank, which has actually been the model we've seen in most other markets in the world. So I think it's a really interesting question for the American regulators to think through of, did we make it so hard to get licenses that we enabled this sort of parallel ecosystem to evolve in a way that's caused consumer harm? Okay, the other quick story that we wanted to touch on is that Swiper has raised £6 million, which was reported in the papers. Swiper, which is a UK-based travel paytech firm, has raised £6 million in a Series A to streamline airline disruption payments. Millions of passengers are affected by disruptions such as delays, cancellations, lost luggage, or even being denied boarding each year. Swiper claims that traditional payments for disruptions, such as paper vouchers or bank transfers, are time-consuming, inefficient, and prone to fraud. Its digital platform lets airlines offer disruption payments to customers in the form of virtual prepaid cards, through their mobile app, and through the Swiper welfare card. Having launched in 2020, Swiper now works with 26 airlines across 70 countries.
Yeah, I was initially, not going to lie, mildly skeptical about this one. I was just thinking, would airlines actually want to make it easier to pay money out to customers who experience travel issues? But I think I'm probably just still scarred by some of the traumatic experiences I had trying to get refunds on flights from COVID. But yeah, when you actually sit down and think about it, you think about the amount of admin time that must be lost by airlines at the moment processing and administering these payouts. You can start to see the opportunity here. Swiper are claiming that they can cut 60% of admin payment processing costs and help companies to move away from these retro paper vouchers, which I've certainly been a recipient of at least once or twice. So you can sort of potentially see the opportunity from that perspective. And I think there's also an interesting loyalty angle to this. Swiper really seem to be focusing, when they sort of are talking about their product and what they offer, on this ability to easily and almost in an automated sense differentiate the compensation that's offered by class of travel or sort of loyalty status. And we're seeing, again, as we talked earlier about the noise around the private banking and the wealth management space, we're also seeing a ton of noise around the loyalty space. Actually, how do financial services organizations recognize and in a truly digital way respond to different types of customers in a way that shows that they recognize them and they are responding to them on a sort of personalized and custom basis. So yeah, I think it's interesting to see that they've started in the air industry and obviously are very specialist within the air industry. But I could also imagine these kinds of sort of custom virtual cards that you can link to specific customer groups having other use cases as well. So interested to see what they do next.
And finally, a look at something a little more light-hearted from the world of finance. How much is pocket money in 2024, and where are kids spending it? This is reported in Sky News. Bad news for UK children. Data released from NatWest's Rooster Money app, the UK bank's card and account for kids, shows that pocket money is in decline. 30% of UK families pay pocket money, down 2% year on year, with the average weekly payout standing at £3.78, down 10 pence from last year. According to NatWest, pocket money now only makes up 14% of a child's annual income. But fear not, kids are now embracing side hustles to plug the gap. A typical child will net almost £500 a year from chores such as washing cars, mowing lawns, or even looking after chickens, as well as embracing their entrepreneurial spirit by selling items online, babysitting, or tutoring. Chris, what do you make of this? Is the next generation going to be the most entrepreneurial we've ever seen?
Well, I hope so. I think there is actually quite a lot that I think banks, particularly, and fintechs can do to help with that process. I have 4 children. 3 of them are grown up now. My youngest is still at school, and I've always been a real fan of GoHenry as an app for kind of managing pocket money, and also you get a bit of a tracker on where your children are spending their money. But the one thing I think I'm very surprised about is that there aren't that many good applications to enable kids to have bank accounts and to enable parents to have that relationship and manage that relationship with their children about money. I think it's something that I'm surprised that all of the major banks haven't done a much better job of this in terms of either providing this service themselves or partnering with fintechs like GoHenry or building their own brands with fintechs. I think it's a massive missed opportunity, because if you provide a good service and a good customer experience for children around managing their money and helping them manage their money, you're likely to keep them, whether they become, when they become adults, whether they get a job with someone else or whether they become an entrepreneur and set up their own business. So I think there's a huge opportunity that is a missed opportunity and continues to be a missed opportunity for major banks to step into this space a lot more and provide a much better customer experience, not only for children but also for their parents, and help children and parents together manage their money and educate children much better.
Can I also raise up the thought of the ones, we talk a lot about fintech and bank partnerships, for instance, or tech partnerships like Apple with Goldman Sachs. But surely the bank that connects the Robux, currency that children often use, with their traditional bank is going to win everything. And we've got to look at the fact that children nowadays probably aren't looking at fiat currency in the same way that we are. And the bank that gets ahead of that is surely in for a treat, right?
I suspect there's quite a few parents listening to this who have inadvertently connected their bank accounts to virtual worlds that their children inhabit. It's at great expense. Kate, were you surprised by where the children were spending their money?
No, not really. I think what the top number one was Amazon. I mean, no surprise there. Tesco, sweets, obviously. McDonald's, I'm still very partial to a chicken nugget. The list is always kind of sensible places. Obviously, my son will not be shopping at any of those places. He will solely be shopping at local independent retailers, obviously. He's currently 2, so I haven't really had to deal with this just yet. But I think it's not a surprise. The thing that did surprise me was a stat around pocket money now only making up 14% of an annual income. That is a lot of other income that is not pocket money. So I'm just confused by that. I'm really worried about what are these side hustles? I don't think you can really top up it by looking after chickens. Have they got sort of dark side hustles that they're hustling on the side? I don't know. This is just what concerns me.
Working for the North Koreans or the Russians, hacking.
Yeah.
I was hoping it was maybe because they were actually getting paid for doing the chores and that wasn't counting as pocket money, and pocket money was only maybe money for nothing, but it wasn't quite clear. All right. Well, I think that wraps up this week's FinTech Insider News. Thank you so much to my guests today. Where can people find out a little bit more about each of you, Kate?
LinkedIn is probably the best place to start. Kate Moody on LinkedIn, or you can drop me an email, kate@11fs.com.
Chris, where can people find out a little bit about you and what you're up to?
Sure. OzoneAPI.com. We have a newsletter you can subscribe to. So go there, OzoneAPI.com.
And Doug?
You can check out everything over at fintechfringe.co, and of course me over on LinkedIn as well. And on Twitter, Dougie Fintech.
And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out about what the team are up to at 11fs.com. So thank you all so much for listening. Please do follow our podcast. Please leave us a review. Let us know what you'd like to hear about in future shows. Help other people find us. If you want to join the conversation, find us on social media. Just search for 11fs or Fintech Insider, or you can email us at podcasts@11fs.com. Thank you all so much, and goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters. We are super excited to announce that 11FS will be at next month's Money 2020 Europe event over in Amsterdam. We have loads of cool things lined up, including a couple of podcasts and even a run club for those who really want to burn off all of those stroopwafels. You could also swing by stand K08, where our 11FS Pulse team will be showing everyone what best-in-class UX looks like with our industry-leading product catalogue from every corner of financial services. They'll be hosting live demos throughout the event, so be sure to swing by and say hey. See you in Amsterdam.